Strategy: The Bitcoin Refinery by Clyde Vera. Oil companies destroy communities while building wealth. Take Shell in Nigeria, for example. Decades of oil extractions left rivers black with crude. Farmlands dead, and fishing communities struggled to survive. Billions of dollars flowed into corporate coffers, but local families were left with poisonous land, contaminated water, and broken livelihoods. Generations were affected, yet the company continued profiting while people bore the cost. Oil refineries were powerful. They took crude oil and turned it into petrol, diesel, and jet fuel, pretty much products that the world can use. That's what made oil the foundation of the 20th century. But oil came with pollution, corruption, and wars. Now we have something better. Bitcoin, a digital energy. And Strategy is the world's first Bitcoin refinery. Bitcoin miners can take wasted energy and make it useful. Instead of letting gas flares burn into the sky, miners capture it. Instead of wasting excess power, miners can convert it into money. People even use mining rigs to heat their homes, cook food, or even run small businesses. In Finland, miners support heat to thousands of homes in the winter. But in Norway, a town voted to shut down a mining facility, and suddenly their electricity costs shot up by 20%. It's ironic, the very miners residents complained about were actually keeping costs low and putting the energy to good use. Even a small mining rig like the one heating a Serbian beef jerky stall is proof that Bitcoin can turn wasted energy into practical value. I literally saw a video online of a small business owner that's using a mining rig to heat his beef jerky. So, rather than turning on the heater, you can just turn on the Bitcoin miner, heat the food up, and make money in the same time. Some people might say, oh, you're using too much energy just to heat the food. Well, in countries with cheap electricity, it becomes doable, especially when you're earning sats in the same time. But in countries like the UK, where electricity is high, then it makes sense to run on renewable energy when mining Bitcoin. Bitcoin takes stranded energy and transforms it into value, and Strategy takes that value and makes it investable. Think of Michael Saylor as the Rockefeller of Bitcoin. Rockefeller didn't invent oil, he refined it in the 19th century, turning crude into gasoline, kerosene, and jet fuel to power an industrial empire. Saylor isn't fueling factories or railroads, he's fueling the financial world. With Strategy, he takes raw Bitcoin and refines it into products, preferred stocks, convertible notes, and tools for investors, creating a new kind of economic infrastructure. Here's an image I wanted to share. Strategy is Bitcoin Refinery that converts raw Bitcoin into securitized financial products deliberately engineered to appeal to different pools of investors based on their volatility, risk, and return goals. So on the left side, the first stage is collecting Bitcoin. You put it into Strategy, which then they convert it into all sorts of products. So Stretch, Stride, Strike, Strife, convertible notes, Strategy's common stock, ETFs like Misty, and then you have the options market for day traders. Strategy has made a strategic decision to securitize Bitcoin as an asset class. So very briefly, I'll explain to you what these products are. MSTR is the common stock. They raise capital through ATM at the market, and then they buy Bitcoin. This is especially useful because they don't incur any debts. And then he does the same for the other 4 products: Strife, Strike, Stride, and Stretch. Strife targets the bonds market, and it gives you a dividend yield of 9% per year. Strike pretty much does the same thing, but it's more volatile, which means you have more upside growth, but it gives you only 8% yield per year. Stride is the one that gives you the highest yield, but the risks are higher, yet it gives you a 12% yield. And if you're into cash ISAs, Stretch would be your best bet if you're looking to have a fixed income per month. It gives you mostly 10% yield, but it varies between 9.5% to 10% yield, and you get paid every month. This is a better alternative to Trading 212's Cash ISA, which yields only 3.85% AER. Cash ISA is backed by fiat currencies, while Stretch, for example, is backed by Bitcoin. Those are just some of Strategy's products. Now they also issue convertible notes for institutions that want exposure to Bitcoin, but they just can't get a hold on Bitcoin directly, and so they have to settle for a security that can provide them exposure to Bitcoin. And then there's the options market for traders. It gives traders liquidity, so those who want to capitalize on short-term volatility. This is the type of products that Strategy is able to provide the financial world. Strategy isn't just holding Bitcoin, they're refining it into tools for every type of investors. Strategy versus tech companies. Compare this to Tesla, Amazon, and Apple. While those are amazing businesses, those companies have thousands of employees to pay. They have factories, materials, shipping, and logistics to worry about. And they also have regulators breathing down their necks. That's capital leakage. That's counterparty risk. Strategy is different. They don't build cars, they don't deliver packages or manufacture phones. They refine Bitcoin. Just capital plus Bitcoin equals shareholder value. They don't have to worry about borders, unions, cargo ships, or tariffs. Unlike oil companies, they are controlled by OPEC and are affected by geopolitical events. Prices can swing dramatically if there's conflict, sanctions, or supply restrictions. Investors face risks beyond the company's control: political, regulatory, and international. Tech companies like Tesla, Apple, and Amazon must navigate government regulations, trade laws, and supply chain rules. This just adds uncertainty, such as new laws, tariffs, or bans can directly hurt profits regardless of the company's efficiency. And then banks. Heavily regulated by central banks, interest rates, monetary policy, and regulatory changes can make or break profitability. But Strategy? It's anchored to Bitcoin. Strategy operates under Bitcoin's rules for its core asset, which is math and code. Of course, as a US company, it follows regulations and corporate law, but unlike oil, tech, or banks, the company's main value driver is Bitcoin, a decentralized, predictable asset and free from human politics. If Bitcoin wins, Strategy wins. Conclusion: why I only choose Bitcoin and Strategy. I don't invest in Tesla, Amazon, or Apple. They are brilliant companies for sure, but every day they burn capital, wrestle with regulations, and depend on thousands of moving parts. Every shipment, every employee, and every factory adds risks. Strategy is different. It's the refinery for Bitcoin. It takes the raw, incorruptible power of digital energy and turns it into products that anyone can use. Growth investors, income seekers, and traders. Bitcoin is the base layer, pure, scarce, and unchangeable. And strategy is the refinery that makes it practical for the real world. Oil ruled the 20th century. Bitcoin is powering the 21st. So for me, it's simple. I don't chase hype or diversify for the sake of it. I focus on the foundation and the machine that refines it. I only invest in two things: Bitcoin and strategy. That's it. If you learned something of value, I'd appreciate you leave a like and subscribe to my channel for more videos like this.